Yeah, very good morning all. I'm Divakar, taking care of, so I'm product specialist with HDFC Securities, taking care of mutual fund and PMS business pan India. And first of all, I would like to thank you all for taking out the time and joining this webinar on equity outlook and fund update by Mr. Sanjay. So, Mr. Sanjay is from HDFC Mutual Fund. So, he is heading central team in HSBC Mutual Fund.
HSBC.
He work, sorry. Hello. Yeah. So he worked with other companies also like Franklin and Fidelity, and he's having like 20 plus year of experience in this market. So we'll be getting a good insight about the market. So it's over to you, Sanjay, and yeah, you can take it forward.
Sure. Thank you, Mr. Devakar, and thank you, the HDFC Securities team, for giving us this platform to address your esteemed investors. So, my name is Sanjay Sachdev, as Mr. Devakar. So, I currently work for HSBC Mutual Fund, uh, which was, basically, I worked for L&T Mutual Fund for 10 years prior to this, and then L&T Mutual Fund got sold off, and then HSBC Mutual Fund bought the AMC. So, for a change, in the last so many years, we have seen global AMCs exiting India, but this was the other way around where global AMC has bought the domestic AMC. But this is some background. But so what I would cover today is a little bit of the market outlook. I'm sure we are seeing fire in the equity market, so everybody is happy and concerned. So I will just cover on the market front and why we believe mutual fund is one of the best routes to invest in such markets. And third is a couple of funds from our stable, which can be looked upon strongly from by y'all. So first on the market, so maybe with the next slide, Mr. Devakar. Yeah. So I'm sure this is something which is being so Sensex Nifty hit new peak. I mean, even today the markets are up by a couple of points. So we are almost there at 67,000 Sensex. I mean, who would have believed way back in 2020 where the market crashed and was at all when it hit the bottom of 25,000 in a span of 3 years, market would go up by 3 times. I mean, but then I would, through this slide, I would like to go back to some history because the good part is I have been part of this industry for the last 20 years and I have seen this long journey of the market. So just to give us some heads up, almost 2 decades ago, way back in April 2003, markets were at about 3,000. That was when the markets actually were at the bottom, right? Exactly 10 years from there, I mean, April 2013, exactly a decade after, market was inching upwards. Of course, we did see a crash in 2008, but post that market did recover, and Sensex in 2013 was close to 19,000 in spite of a big crash which happened in 2008, right? Market still was at 2013, very strong growth from 3,000 to 9,000 in a decade. Again, if you look at April 23 this year, market touched 60,000, 62,000 plus in April 23. Again, a very strong growth of 3 times in 10 years. So we have seen markets really jumping and showing new highs. And if you see, out of those 20 years, 20 financial years from 2003 to 2023, Sensex have only given negative returns in that set financial year only 5 times out of 20 times. That means 15 times, which means 75% of the time, Sensex have ended giving positive returns. I'm talking about Sensex or Nifty here. I'm not talking about mutual fund returns, right? That is one part, and we always get worried when we see Sensex at new all-time high. I mean, that is what now the media will keep highlighting every day. There will be a front page headline: Sensex at all-time high, because naturally, when we are at the new levels, every year the number will breach the new levels. Every day the numbers will breach the new level, and there could be volatility. We are not denying that at all. But when it comes to valuations, because what happens is ultimately a number Sensex is backed by valuations, right? And if you look at the current financial year 24 valuations, Nifty is at 20, right? Mid cap is at 25, and small cap is at 17. Where I come from is when you look at these three numbers on a plain vanilla basis, this is price to earnings. This is what the valuation talks about. The small caps are the cheapest among the three. I'm not saying markets are expensive. Where we are coming from is markets are not in the bubble territory. Way back in 2008, if you remember the subprime crisis which hit the world and the financial crisis which hit the world, the market, the Nifty or the Sensex, the price to earnings was close to 28 times, which means the average, of course, currently, if you look at the last 10 years, the Nifty average has been close to 18. We are at 19.8, definitely slightly higher, but definitely not in the bubble territory. And when you look at small cap, in the past, we have seen small cap price to earnings hitting 30 times, 40 times. We are at 17 times. What it means, and mid caps is the most expensive. So when you look at the market from a market capitalization point of view, mid caps are expensive. Large caps are reasonably valued, but small caps are still, although there is a strong rally which has happened in the last couple of months, but small caps are still reasonably valued when you look at it from a market cap perspective. And usually, remember one thing, small caps go at a premium to large cap. What it means is small caps trade at a higher P, whereas in the current scenario, small caps are still cheaper compared to middle large caps. So yes, one needs to get a little worried, but that does not stop us from investing in the market. We can't be staying out of the market or saying, okay, let me time it and let me try to book some profits and let me try to re-enter. We have seen in the past a lot of investors who tried to time the market were left out of the market and felt left like being out of the market. So that is one part on some data which I thought it's important, because that is what everybody is watching, the Sensex level. Even a layman would be wanted to know markets are very expensive, although the investments in mutual fund or stock would be zero, but still that they may be finding the market expensive, right? So that is one data point I thought I'll share across. Next slide. Yeah. So next slide talks about, suddenly we have seen, so when you just go back little back, when you say markets are expensive, if you remember September 21, market had touched 61,000, and again in the month of March 23, just before this rally started, market did touch 61,000 again. That means if you evaluate that way, almost for 18 months market did not go anywhere. It's only the last 3-4 months from 61, 62, market has breached 65, and we are currently at 66,000 in terms of Sensex. When you look at on absolute terms, from 61, 62, we are not even 5% up. So where is the bubble? So that's where I'm coming from. And what happens is, usually when a FIs exit India, right, and that is what the graph here shows. If you see Jan 22 onwards till March, right, or maybe till February 23 in the current graph, FIs have been exiting except for 2-3 months where they were net positive. What it means is, in spite of FIs exiting India or trying to move out of the money, because what the reason why FIs move out is whenever there is an opportunity in other markets, they try to move out the money. And whenever they believe the markets are attractive and there is an opportunity in that market, the flows are back in action. So whenever at least in India, the good part is mutual funds have been a strong supporter to the inflows to the equity markets. And of course, the big example is the strong SIB book which the mutual fund carries of close to 14,000 crores, which hits month on month in the industry. So where I'm coming from is whenever FIs move out, we've seen a strong correction in the market. But in the last 15-18 months, although the market, except for the last 3-4 months, in that period from Jan 22 to almost February 23, in that 12 months when the FIs almost moved out the money, right? Markets did not correct. The markets were stable. That is because there is a strong domestic inflow which is also happening in the market, unlike in the past, 10 years ago, where the moment FIs move out the money, we have seen strong correction in the Indian equity market. But that is not the scenario today, because Indian investors are also strongly investing in either they are investing in mutual fund or they are investing in direct stocks. And that is what helps the market to compensate for the outflows which has been done by the FIs. But what happens when the FIs come in? If you see the last 3 months, If you can just move the next one, I mean, just put that there will be a circle. Yeah. So when you see the last 3 months, whenever the FIs pump in money, the market starts running up. Of course, market do not, I mean, you have seen a phase where the market consolidates, and then you see a phase when the markets really take off. And then, of course, we always follows by a stable, again, a consolidation phase of the market. So right now, what we are seeing right now here is where the FIs have been very net positive for last 3 months at a trot, even in the month of July. They are even in the month of June and even in the month of July, month to date, they have been net positive, which means FIs. And the reason why this has happened is where we, in the last 15-18 months, we have seen a strong hike done by the global market, including Fed, which is US. US has upped the rates by more than 400 bps, by more than 4%, and the same happened in India also, where the RBI increased rates. So what the belief is now, the inflation is trying to cool off. Maybe possibility we may, at least in India, we may not see further rate hikes from here, but possibility of a small last phase of rate hike which may be feasible in US, or it may not happen. Then we may go for a pause phase. And when you are at the pause phase, that is where the conviction gets built. Now is the time to start looking out for other markets, and that is where the FI starts coming to different emerging markets like India, right? So that is the key parameter, the key barometer of why the markets are rising. Next slide. Yeah. So this is a small graph what we have played out in last. I mean, that is what I already highlighted in the first slide about the valuation front. Now, if you see the valuation front, the red line is the mid cap line, and it shows what I showed in the first slide. Mid caps are slightly expensive. The PE currently they are at about 25. The Nifty small cap is the lowest, which is at the lower line, which is close to 17. So where I'm coming from is in terms of valuations, markets are not in the bubble territory, because when you are in the bubble territory, when everything is so raw, so rosy, everybody, even your neighbor, everybody is investing into mutual funds, everybody is investing into stocks and very super confident. And that is where markets really go over the board. And that's where we see a strong correction, which is not the case today. Even if I tell any investor who's not put money in mutual funds to invest today, the investor starts getting worried, because the number he's seeing on the screen is 66,000 Sensex, and that's where the worry comes. The moment the worry comes, it reflects we are not in a bubble territory. But when you are not worried, and then you are just investing all your savings here, and that is where the problem arises, that is where the concern comes, and that is where the markets correct. So when you are worried today, you are concerned. Yes, you are happy, but you are concerned. That means markets are not in the bubble territory, and definitely, again, it makes a good opportunity to invest in Sensex, right? So, and if you remember the first slide which I showed across Sensex from 2000 journey from 2003 to 2023, markets have always touched new highs. I mean, where we would be 5 years from now, maybe we might, we might breach 1 lakh crore in Sensex. Definitely, yes, it's a very strong possibility, right? And why this is a possibility, I will show that in the other slides. Yeah, next slide. Yeah, next. Yeah, we all have been hearing about it. I think globally, everybody is eyeing on India. I mean, every FI has started looking at pumping money in India. Every FI wants to increase allocation. Every FPI is looking at investing in India. So India is becoming a very, very strong manufacturing hub. From manufacturing, we are exporting, right? So what are the themes which is playing out? Definitely, there's a strong consumption theme which is playing out. Last couple of quarters, we did see a slowdown in the economy. We did see a slip off in terms of GDP growth. But what is driving our markets crazy? Because there's a strong, because you have a huge population which is going to play out in the next decade. I mean, today we all know India is the #1 population in terms of population across the world, right? And the good part is it is not only the population, but the demographics. When I say demographics, that means people in the age of 21 to 40. We have a good bulge of a population here. That means the population is productive, is going to be productive in terms of economy, is going to earn money, is going to spend money. So a population like a Japan or a Europe, there is a population, but definitely they are degrowing, because the reason they are degrowing and the GDP is falling off is because they have a huge population in the aging segment. Population who is about to retire, or there's a huge population which is already retired. What it means is they may not be productive in terms of output. And when you are a certain age, definitely your spends also come down. But in India, it's the other way around. You have a earning population, you have a population which is spending money, right? And huge population. I mean, just imagine, just look at your expenses which have shooted up in last couple of years. 10 years ago, maybe your household expense was so low. Today, the expenses are just multiplied, and same would happen in the next decade. So I think our belief is the entire next uh, 10 years surely belongs to India, and definitely one has to be in the capital market, in the equity market to reap that benefit and create wealth for yourself, right? So, and again, second part is from an infrastructure point of view. Next slide. Yeah. So when you look at it, we all have been seeing that change which is happening in India. Multiple new cities coming up, multiple airports are coming up, the railways is getting upgraded. We did hear about it, but definitely the entire upgradation is happening big time. New metros are coming across cities. It's not only in the core top 4 cities of India, it's coming across the smaller cities also. So there's a huge expansion. The urban India is growing rapidly. So when you see, and definitely government also is spending. So government has been the first to push this, right? We last from 2008 onwards, we are not seeing too much of a spend by private companies because capital expansion, a lot of money was already spent on machinery prior to 2008. Post 2008, we have been seen a slowdown from the private companies, but in last 8-10 years, the entire spends, the entire economic momentum has come from the government spend. When I say government spend, it could be by way of railways expansion, it could be by way of road expansion. We have seen record kilometers of roads being constructed every day in India, right? We have seen a strong power consumption which is happening here. Huge consumption factor is playing out. Urban India, urban infra. I mean, we have seen bridges, metros, railway lines, a lot of airports. Everything has been coming across in India parallelly in the last couple of years, and this is only going to expand. What it means is definitely when you see an expansion in the infrastructure space, that means more manpower required, that means more money in the people's hand, and definitely more spend which will happen in the economy. And that means more profitability, more turnover for the companies, more profitability companies, and better share prices of those companies. So this is the way one has to look at this slide. Yeah, next slide. Right. So I just highlighted about this consumption story, right? I mean, a small data point which I can highlight here is, if you see, they were hardly 5 years ago, which was way back in 2018, in mutual fund, there were hardly 1.5 crores of unique investors in mutual fund. That number in 5 years have doubled to 3.75 crores. And what is the population of India? Population of India is more than 140 crores. How many demat holders? There are more than 10 crores demat holders. So definitely there are more, and there are more and more people filing income tax returns, because as we all know, because entire data is getting captured in system, which means more and more people will file returns, more and more people will invest in mutual funds, right? And that, and what, one more thing, as I said, with the increasing income, I mean, way back, just to give one more head up, a couple of years ago, maybe just a decade ago, way back in 2012-13, 83% of the Indian population had income of less than 2 lakhs, right? Today, that number, I mean, if you just 22 data shows, the number has come off to less than 65%. And we believe in the next 5 years, the number will further come off to 44%. What it means is there is a lot of aspiree group, I mean, where the income levels are going to balloon. I mean, if you see this data, more than 50,000 of income, right? 2030, 93% of population will have a huge income. Huge, matlab at least income which can be spent, income which can be saved, income which can be, yes, expenses are also going to go up, right? But this data talks about in consumption in India remains a very exciting opportunity, and that is where the world is looking out. I mean, if you look at the car manufacturing hubs, car leaders are coming to India. The iPhone is wanted to manufacture. They have already started a production in India. So everything, the entire manufacturing, and of course the plus point is there is a distrust in China. So a lot of those entire supply chain of those companies were based out of China once upon, and the leaders, all the global giants were present in China. Now, because there's a distrust and definitely there's a slowdown in Chinese economy, the entire hub, a lot of hubs is moving to India, and that is what also is helping the smaller cities to build, go urban, create strong infrastructure, and help the economy to move further and help the GDP to grow faster. That is where I'm coming from. Next slide. So the bottom line is, yes, when yes, we are at the Sensex is at all-time high, no doubt about it. But yes, I mean, we expect a mild recession in the US. I mean, definitely the data point is coming out, inflation cooling off. Fed is saying we may hike rates we further, or maybe we will pause now. But this, it will not be a very hard landing. We believe there could be a soft landing, which could be better off for the world, right? And that's the reason why we believe the rate hike cycle may be on the verge of getting over. Maybe from 2024, we may see a cut in interest rates. When you see a cut in interest rate cycle, definitely a lot of companies benefit because they can borrow at lower cost, which helps their bottom line to improve and helps the profitability to improve, which further helps the shares to go up, the share price to go up. As I highlighted in the previous slide, a very positive demographic. That means age population which is in that super consumption phase, earning phase, consumption phase, spend phase, which is definitely going to help. I'm sure the entire India is seeing a good strong spell of rains. I mean, we did talk about El Nino impacting the rainfall, maybe August, September. At least the July data is, I think, at least as of now, the rains are normal, except for a few states. Of course, that the distribution of rain is always a challenge. It will remain a challenge because of strong negative climatic change which we are going through. But at least from the time, I mean, at least the first 3 weeks of June were completely dry, and right now we are going through a strong, across states we are seeing a strong rainfall, which is definitely going to help bring down your food inflation. I mean, we all know how the tomato prices really went up the sky, and we are seeing the prices cooling off. Yes, because of the strong rains, maybe we'll have a strong supply maybe from August, September across vegetables, which will help the food inflation to cool off. Second thing is, because there's a slowdown in the world, especially Europe is going through recession, US is slowed down, Japan is slowed down, right? Your oil, China is going through a downtrend. So the oil prices, which is where we import a lot of oil, has also cooled off. It's in the reasonable price band. So your commodity prices are lower, your metal prices are lower. Definitely that is also helping your inflation to cool off. As I mentioned, there is strong government spends happening across infrastructure to help improve infrastructure space, bridges, airports, railways, roads. I mean, you name it, and the spends are happening big time, right? So we are in that strong drive, and that is what the world also believes. We are in that uh, phase where India could be the rising tigers in the next decade or so, and that's where we believe. The consumption to remain strong, and that's why we believe one need not look at the Sensex numbers and say, let me wait. You cannot remain out of the market because you have to invest thinking where are the markets going to be from 5 years from now, rather than thinking where is the market going to be in Jan 24 or July 24, because your horizon should be 3 to 5 years or maybe 10 years. That's how you create wealth, not from a short-term perspective. The moment you think, because what happens is when you invest today, I'm sure the NAV may be down 2%, maybe next 2 months, 3 months, but that should not deter you because your horizon is 3 years, 5 years. You're not invested with the keeping in mind, because ultimate aim is to create wealth, and wealth can always be created by investing. The good part is, I'm sure SEBI also has been really working in favor of investors. Although it may get little irritated for, say, for mutual fund distribution partners in the right mutual fund distributors, but from an investor point of view, they are really doing a good job. There's a lot of transparency being created. You can check the fact sheets. You can really know what's happening. They're trying to bring down the expenses in the mutual fund. So definitely, mutual fund is a very sweet space to be from a investor perspective, right? So when I look back in the last 20 years, I think mutual fund has given a great opportunity to investors to invest. We have seen, of course, FD rates are also attractive, no doubt about it. But yes, from a taxation point of view, mutual fund, equal taxation point of view, mutual fund still remains a better off space when you are staying put for a long-term perspective. So that was one data point which I thought it's very, very critical to share across. So next thing which I would want to share across one slide especially is the mutual fund is also exploring newer ideas. Now, where does the new ideas come from? Right? There's so many new companies coming in India. They are only growing and growing. I mean, if you look at it, if you understand the market cap, the top 100 companies are the large cap companies. The next 150 companies, 150 to 250 companies are mid cap companies, and companies which are beyond 250 companies are small cap companies. Now, when you see 5 years back data, they were not hardly 230 companies which had a profit of 100 crores and above. Now, 5 years from now, these numbers have doubled. I mean, there are 450 companies, right, which have a profit of more than 100 crores, right? Out of that, there are 200 plus companies where the profits are more than 250 crores. Where I'm coming from is the small cap universe is increasing. And this, if I extrapolate this data and make it 2028, I'm sure the number from 450 will become 1,000. That means the mutual fund universe is also increasing. What did not worried ki whether I'm investing in mid cap, small cap, large cap, you have to invest in blend of products, right? And which will help you to generate alpha, because mid and small cap companies do generate alpha provided you have a long horizon. And as you remember, the valuation point of view, small caps are definitely valuation. You can do a lot of SIPs. You can go on and do SIPs for a long term, big amount SIPs in small caps. If you want to use that route, you can do that. But where I'm coming from is the stock universe continues to see new additions, growth in profit and growth in market cap. One need not be worried that I'm investing in small cap. Yes, if I have a good horizon, I am not bothered. I am going to invest for 5 years. I'm sure mutual fund managers will figure out more stock ideas where the valuations are attractive and invest in the good ideas and give me extra alpha generation over the next 3-5 years. That is where we come from. Next slide. Yeah. So just to end my session, I thought I need to highlight two funds. I'm sure some of y'all must have invested. We had launched this HSBC multi-cap fund way back in Jan. The NAV, the NAV is close to 11 and a half, which means the investors who invested during the NFO, the NAV is already given 15% plus absolute return in a span of 6 months. So definitely, yes, I mean, we have a good, strong investment team which is doing a good job here. As I also highlighted, small cap fund, which is where if you see this quartile ranking, a small cap fund on a 6 months, 1 year, 2 year basis, 3 year basis is all green and blue. It is no red, which means among the 25 small cap companies, our performance in top 3, top 4. That is where I'm coming from. So on a 6 months basis, the fund has given 16% return. On a 3 year basis, the fund has given 43% CAGR. So where I'm coming from is definitely it's a good space to be invested in small cap theme. If you don't want to just pure, definitely I would not say put all your eggs in one basket. You should not be investing everything in small cap. You have to diversify. In case you need diversification, you can invest in multi-cap funds also, which are part of the industry, and it invests in across market cap, mid cap, small cap, and large cap. So you are well balanced in investing in such funds. So this is what I had to share across. I did highlight about why we believe markets will further rise over a long term from here, and what are the fundamental, what are the theories behind it is something which I highlighted, and I ended up with talking about two of my funds which I would want you all to look at from an investment perspective. If you are worried about the Sensex levels, but do not stop yourself from investing. You can use the SIP, systematic investment process route. Keep investing on a regular basis. Let the investments get invested over a period of say 6 months, 12 months by doing weekly, fortnightly SIPs, which are available as a very simple tools to you all. So this is what I had to share with you all. I would want to leave that from here, and then I keep if I'm sure you always have some questions, I'll be more than happy to answer those. Thank you very much.
Yes, thank you, Sanjay. Thanks for sharing such a great insight. Definitely, like yes, FIS flows which you have shared, then inflation is cooling off, then the chances of rate hike is very less. Consumption, yes, you are bullish. Many are bullish on that. Consumption is a one thing. Because of that, there'll be some good growth which we'll see. Importance of consumption, financial services, positive demographic, and the government expense, capex. So all those things will play a major role for the growth of economy as well as the growth in the investment which we'll see. So now the forum is open for Q&A, and if there is any questions, you can write it in the question chat box, wherein we can take it and like definitely answer those questions. So there is one question from one of the investors. So Sanjay is like, is a market correction possible? How far would the market descend in a correction?
Okay, so I think it's a very valid question, because everybody, when the markets are touching new high, everybody is worried about corrections, and the market starts correcting, and suppose if the investor says, ki, okay, if the markets are back to 60,000 in terms of Sensex, I am going to invest. But what happens usually is when the markets correct, when the Sensex size is 60,000, suppose markets correct 5% from here, right? And investor says, okay, I had decided that I'm going to invest at 61, 62,000 because if the market's correct 5%, I'm going to invest. But that usually doesn't happen because the sentiments turn negative and you get worried because markets may correct further. And that's how the investments do not happen. And one ends up investing in the momentum time, right? Yes, in terms of valuation, as I said, there is some mid caps have value. I mean, gone if you remember that slide. But large caps are reasonably valued. What becomes critical is the earnings growth, which we expect to better and better in the next 3-5 years. Yes, markets can correct because we all have seen that pain last year when there was a the Russia-Ukraine war, which got spelled out, and the commodity prices skyrocketed, and the market did see a correction, but the correction was hardly 5-7%, right? So definitely 5-7% is part and parcel of any strong bull run. One did not get worried, because ultimately, if you do not, suppose if the markets and you invest today and the markets correct 5%, your valuation will be down by 5%, but you did not invest from that 3% perspective. You have to stop seeing those portfolios valuations on a daily basis. You have to see it 3 years, 5 years from now, and then see whether your valuations have grown at a good pace or no. As I said, yes, corrections are part and parcel of any markets. Even in a good bull time, even the markets, when they do superly well, markets do correct 5%, 7%, which is very normal. We did see a strong downside from 39,000. In the worst case scenario, we did see a very strong correction, which was if everybody remember that COVID time, March 2020, when the markets from 39,000 went down to as low as 25,000, which means market did correct 25% from there. But in 3-4 months time, market did rebound back, and they were back to the same levels. And if you remember way back in December 20, same year, 2020, the markets were back to where they were. So market does bounce back. One did not get worried and panic and say, let me move out and remove my principal. No, you have come to invest to create wealth, not to see your principal going down and principal come back and trying to exit. Yes, corrections are part and parcel of any equity markets. Yeah.
Yeah, great. So
hope I have answered that question.
Yeah, I believe that. I believe so. So if there is any further question, like if anybody has. Sanjay, what do you think? Which category would be good if somebody is having horizon of 5 years? So what could be the best category which we can look at?
See, if somebody wants to take a sectoral call, definitely infra as a sector is looking great, because as of now everybody was invested in infra sector. I'm just giving a little bit of everybody was invested in infrastructure way back in 2007, and then everybody burned their fingers. But what has happened is, the good part is, even today, if you check India's balance sheet, I mean, a lot of the leverages have gone. So higher NPAs were there in banks. This infra companies were highly leveraged. The entire balance sheet of the Indian book has got cleaned, which means the large cap, mid cap, small cap definitely are in a better shape than what they were 10 years ago. So when you look at the segmentation, I mean, I would suggest clients should be invested in all the 3 segments, and multi-cap as a category gives you that, because multi-cap is 25, 25, 25. 25 large cap, 25 mid cap, 25 small cap, and balance 25 usually is tilted towards large cap. So what it gives you a very even portfolios to the investors, where Sometimes large cap do well, sub cap, mid cap do well, sometimes small caps do well. But alpha generation will come. The extra returns comes when you are investing in all the three segments, right? For a long
Agree.
term, small caps do perform. But yes, if you want a stable portfolio, then multi cap is a good idea to be in.
Yeah, I agree with Sanjay over here. So basically, like this is one of the category wherein exposure to all the categories are there. That to the fund manager has the option with 25%, wherein he can like go anywhere. So this is one of the good category which we can look at, and if it's there in the portfolio, definitely we can see a good return over here. So that's how like
Sure.
so all the companies would be there from all the categories. So that is also
Absolutely.
good. So as there is no further question, so Sanjay, thanks for coming here and sharing your and sharing the market outlook, and it was a great insight, definitely. And thank you all the participants. Thanks for joining the webinar and taking out time and join this webinar. And there'll be further more webinars related similar to that, which we'll do over the period of time. So please do come there and take the insight from our speakers. So thank you all and have a great time. Thanks, Sanjay.
Thank you very much. Good day. Bye bye.